wonderful author that we have here. So we were just discussing, amongst all of them, there's, I think, more than 100 years of stock market experience and investing experience. Ramesh, do you feel old already?
I do, but we're sitting in a 175-year-old BSc ring, the Cathedral of Capitalism that I call it. So I feel young, relatively speaking.
Okay, eternally young and an eternal optimist. But you know, Ramdevji was telling me in this used to be the ring earlier, and you all have such great experiences, so much nostalgia perhaps. I want to start with Govindji because we generally, we don't get to talk to him as much as we talk to you guys. What has your greatest experience from the stock market been? I know you're not from Mumbai, you're from Chennai, so maybe you haven't really been exposed to the ring, etc. But in the so many years that you've been in this market, what has the greatest learning and the experience been for you?
Well, there are lots and lots of learnings in the market. Learning is a very active process. You keep learning.
Just hold the mic a little closer to you, yeah.
You keep learning every day, actually. But what I learned very initially in my life, I was just in the market and we had invested in I had sold some shares of Ingersoll Rand. So one of the company executives sold some shares through me. And he said that he's going to do same as last year, profits. He was a top executive. So I sold some shares of Ingersoll Rand. Short. Those days, in Bombay, there was forward selling without any margin. And then the results came. And, price went down a little bit, but I didn't cover the short. I had sold through Kishan Bhai, K.R. Choksi. He is my guru and mentor. So I was trying to see, hoping that it will come down. And finally, it was not coming down. It was just going up and up. And one fine day, he called me up. He said, price went from some 180 I had sold. It once dipped to 160, I didn't cover, and went to 190, 200, 220, like that. So Kishan Bhai told me, you have some position of Ingersoll Rand short. Why don't you cover up the shorts? Whose position is it? So I'm quite ashamed to tell him. I was feeling embarrassed to tell him it's my position. So I told him it's partly my friend's position, partly my position. And, he said, nothing do you have to cover up the shares. The price was 280. Next day, early morning, he covered up at 300, 310. And then the price went to 400. So those days I lost a lot of money selling the short selling. Then I realized that, you should not listen to the company people. He was right in giving me the information, but my interpretation was wrong. So A is that. And second thing is, don't sell anything short. Because when you sell short, you lose infinity. When you go bull, you lose the amount of money you've invested. So from that time onwards till date, we don't do any short selling. So that was the biggest learning, first learning I learned. And of course, there are lots of other learnings, like going and meeting the company managements.
Sure.
I was very fortunate with my uncle Naresh Khanwala and Kishan Bhai. They introduced me into the long-term investing. So we used to go to visit the companies. We went to Madras Cements, traveling about 20 hours by train. And then from Bangalore, we went to a company called LG Tyres, a friend of mine and I. So when you go and meet the companies, you learn a lot of things. So those were good experiences initially. And I also learned that you should always stick to the best of the best shares. I call it as a sleeping point investment. So if you have HDFC Bank and Bajaj Finance and HDFC and Sundaram Finance, in financial services, when NBFC crashed, a couple of friends asked me, you must be in deep trouble with all this. I said, we have a lot of investment, but we have only in these 4 shares, which are pretty good. So I feel that if you invest in the best of the best quality companies, you may be paying a little extra sometimes, but over a period of time, it will be very easy. Even if it comes down, you can buy some more. And holding those shares, you can really relax and sleep well. So that has been the learning.
Okay, so don't go short and, invest in quality stocks. That's the theme that our earlier panelists were also talking about. But Ramesh, I picked up a couple of points from the book. And in one, you mentioned the opportunity of the last 30 years will be dwarfed by the opportunity of the next 30 years. Now, I know you are an eternal optimist, but what makes you so bullish on India now?
You know, this country has given us great opportunities because we're in the right sweet spot. And the difference in being a millionaire and a billionaire, say, is people who believe in this country and believe in these opportunities. Look at, say, Shree Cement. Look at what the founder of DMart has done, or, you know, Wipro, or, you know, MRF. I mean, they've created these great companies out of India. Some are selling just regular household items, tires, cement. But they created billion-dollar market cap companies, all right? So they believe in the opportunity that this country provides. So it's very hard initially to understand that because you don't like the infrastructure, you don't like the regulations, you don't like the systems, the political warfare that goes on. But underlying great businesses find a way to do that. And if you want to make really big money in India, you probably be optimistic and probably remain invested.
But is it very hard now? Because the one thing that has hit us really over the last many months is constant disruption, right? I was reading about how in the media space, you were very bullish at one point. TV Today was a stock which was a multi-bagger for you, which remained a market leader for decades, I think 15, 20 years. But now in this constant day and age of social media, WhatsApp, Facebook, so many new things coming up, Netflix, do you think that disruption is something which is going to sort of, stifle growth in sectors and not make sectors last for too long?
There will be some sectors that will last. I think clearly broadcasting is a great example, as you say. I mean, I have stopped watching live television other than CNBC, of course. You know,
you don't have to say that.
No, but I do watch it. That's a
because I'm here.
Because we, you go to Netflix, you go to YouTube, watch everything consumed there when you're consuming entertainment. News and sports still need live television. So it's not a great space to be in. But human habits don't change. People will still want to drink, want to smoke, want to gamble, want to consume something. So I think, those will be constant compounders over long periods of time. Of course, there will be sectors that will be, vanquished. Automobiles, for example, could be replaced by electrical cars, autonomous vehicles, right? So there is, this thing. But there's some sectors that will remain, pristine and virtuous over the next, say, 20, 30 years of an investment horizon.
Shyam, what about you? How do you approach this entire space? I mean, I know that you've been bullish on many themes in the past, maybe FMCG, consumption, etc. But not only are we facing a lot of competition, there is so much disruption in spaces like technology, etc. But there's also this theme about expensive valuations. How do you tackle all of that today?
So I think from one bull market to another, the leading themes tend to change. Of course, you have the evergreen stuff like consumption, but there have been bull markets in which consumption has also done badly, and there was an opportunity there. If you see the current bull market, I think the opportunity lies in basic industries and capital goods because they have not participated since 2008. You have not seen much of capital formation in these industries. Asset creation has slowed to virtually standstill. You have seen that the banks lent money and assets went bad. So we are only spending the last 5 years trying to clean up all this. So you are going to see no new assets coming up in the near future. You are going to see assets moving from weaker hands to stronger hands. You are seeing protection, and you are actually in an economy which is starved of capital asset creation. So I think that that's a perfect setting for the focus to shift from the kind of businesses which performed in one cycle to the kind of businesses which are languishing in that cycle, and nobody has the confidence to look at them. I think that kind of a shift towards basic industries is what I expect, and that is where I think one should focus. With no disrespect to some of the companies which have done extraordinarily well in the last 4 years, I think that those companies will meet exactly the same fate which Hindustan Lever met in the 90s and Infosys met between 2000 and 2008 or 9, and probably many other companies met in the last cycle. So you will see this shift. And I think that basic industries and capital goods, an amalgam of this is where the action is going to be, because they are all selling at probably very near book value. And I think that the cash flows of these companies can easily see operating leverage kick in.
Okay, that's a very interesting point. Vijay, you want to comment on that? I mean, market leaders may not remain market leaders over the next 5 to 10 years. That's a scary situation to be in, right? I mean, as an investor, at least a long-term investor. How do you tackle that?
I'm prepared for that, because what is happening, whatever the leader in the previous bull market is not necessary to be the leader in the next bull market. So as I had said earlier also, that stock market and politics, one thing is common, that they move on rotation. Like suppose one party is the leader today, maybe after 5 years that party will not be at the helm of the affair. The same thing is happening in the stock market. So the best thing is that you have to watch like an eagle. You have to watch your portfolio like an eagle. And if you feel that your company can be disrupted, or it is not necessary that you have to invest in leading companies only. Not necessary that people have made money in Hindustan Lever or Infosys and or Bajaj Finserv also. There are a host of companies which are unknown and unpopular, where people have really minted money, more than Hindustan Lever, more than Bajaj Finserv. So that's a huge market. It's not necessary that there are only 10 or 15 companies who have really created wealth for investors.
Yeah, that's true. Okay, there's one theme that I want to speak about, which Govindji has spoken about in the book as well, bear market buying power, because it is really easy to ride the bull market, but what do you do in a bear market, and how do you buy, how do you stay the course? Before that, before I come to him, are we at the culmination of this bull market? Is this the start of a possibly near-term bear phase? How are you positioned now?
Sonia, no, I think many times on your channel and otherwise I've said that this seems like a very sharp correction in a bull market. And you see, we threw the kitchen sink at the market. We lost the elections, the RBI governor changed, Dow was down, trade was going around the world. The minute all those events were over, the market rebounded to 100 points. That's bull market action. So bear markets have signals when they start. There'll be leverage in the system, a lot of happy talk in the market, everyone will be invested, everyone talking stocks, the proverbial panwala will be giving you tips. We don't see any of that right now. I think the bull market is intact, and in my opinion, it's still got a ways to go.
Okay, so
on this front, whether it's a bull market or bear market, since it's difficult to anticipate in foresight, do you change the way you buy stocks, the way you look at sectors? Do you do any rotation there? Let's say currently also.
Might do some rotation, but as I think we mentioned in the interview, Vishal, and thank you for doing a great job on the book. It's really riveting. I think the life stories come out so well. So thank you and your partner for doing a great job. The opportunities are in a bear market. The stocks that I think anyone on the panel would have bought, say in the 92 bear market, 2000, they all became 20, 30x if you held on to those stocks. So I've realized the great opportunities in life come in the bear market. That's where you want to come every day, early, go visit your companies when there's less competition. Now the returns are obviously going to be more subdued. But, you still find opportunities because it's a dynamic country, lots of happening in the world. So, I still buy new stuff, if that's the answer to your question.
I'm glad you said that, because this may not be a bear market, but we did get some serious opportunities over the last many days, right? I mean, you had the RBI governor immediately resign. You had the BJP government losing in 3 states, the 3 most important states. And Govindji, I want you to come in on this, because you've said in the past that the biggest money that you've made is during the 2008 crash, and also in demonetization you did make big money. You bought into names like Century Textiles, etc. So in a market like this, where you are getting some opportunities because maybe things are not going in your favor on the macro front, is this a great time to be buying stocks?
See, generally you make money when you have some cash with you. So basically what you do, cash to buy in the bear market. So when markets go very high and much beyond your valuations, and if you find that, maybe next 2-3 years ahead valuations have been reached, prices have reached those valuations. So we generally try to tend to sell and keep we always maintain 10% cash minimum. So I think that cash really helps, because when the market is going up, it's very difficult for you to detach yourself from, some of the blue chips which you have bought, and it's your personal ego also when the prices go up so high. Then you don't want to sell them. So what we generally do is we try and create at least 10% of cash with that money. And when market comes down in crashes like 2008-9 and again subsequently later, even now when NBFC problem was there, we came down from 12, we were 12-13% cash, and we came down to about 4-5% cash. And we could buy shares like at such a low price that they've all gone up by 40% now, 30-40% now, some of them. So basically, if you have thoroughly studied the companies and you know the valuations very well, you have invested over so many years, so you know the general strength of the company. It really helps when you buy, especially when you have cash with you and there's distress in the market. You make a lot of money actually. The idea will be that, after some time, maybe after a month or two, maybe in January, if FIs start buying big way, markets may go up. I would like to go back to my 12-13% and wait for the time before general elections. Because I feel that before general elections, everything will be discounted in the prices. I mean, I've seen in the past things like this. So people would have discounted a third front government or a Khichdi government, minister from each of the parties and all ministers fighting with each other, and everything more than that will be discounted in the stock prices. So it makes a lot of sense in, keeping cash in January, February. Maybe we'll again deploy in March, April, May, like that. So stick to quality companies. Those things we don't disturb them.
Since you brought up the topic of elections, the here and the now, is it fair to assume that, and Ramesh, I want to come to you on this, that whichever party comes to power, there will be, even if it's not a sort of a stable government, there'll be an initial knee-jerk reaction and then the market will move on? Or can something change because of this one trigger?
Actually, I'm of the view that, first of all, that people vote differently within state elections and national elections. So because the BJP lost 0-3, for example, I'm not pessimistic about their chances to come in the national election. Having said that, even if there's a surprise, India grows at night. I mean, governments in India will make us grow at 6-7%. A good government will make us grow at 10%. That doesn't ever seem to happen in India. But we'll still grow at 6-7%. Nothing wrong with that. And great businesses will still make us a lot of money.
Okay, so I wanted to pick up on one theme that the earlier panel was talking about, exiting early, right? And however seasoned an investor you are, there is still this regret of exiting early in some stocks. So Vijay, I was reading in the book that you said that ACC went from 300 to 3,000 and you sold it and you bought an apartment. But you could have bought a bungalow if you waited because it went all the way to 10,000 rupees. Now, how do you tackle this situation?
At that time, I did not have a one-bedroom hall kitchen, my own flat also, right? So at that point of time, what I did, because the kind of money I was making, I had never, you can say, I must have imagined, but never thought that I will really get it, right? So what I did at that point of time was good, because after that, it went up to 10,000, but from there, what happened, that everybody knows. So there is a saying, there is a song कि जो मिल गया उसी को मुकद्दर समझ लिया, जो खो गया मैं उसको भुलाता चला गया, मैं जिंदगी का साथ निभाता चला गया.
Wow.
Well said, well said. What about you, Govindji? I mean, is there any big regret that you had about a stock? And I mean, over the years, of course, it's taught you many lessons, right? So now when you take that investment decision, how do you decide when to exit?
First question, Sonia, you asked about the big regrets. Like you have a wall of fame, I can have a wall of shame with so many regrets, in stock market. But you see the net you have done reasonably well. It's good. So the one mistake I did was I bought TTK Prestige. We were the first to enter. I bought around 15 rupees. And we studied the company well, and we knew that they had some land they were going to sell and so many things. So all our clients also, we made them buy. And one of the group companies, MD, I met him in the golf course and, I said, how are you doing? He said, we are doing very well. I myself bought some shares. It's a great company at 160. I don't know about stock market. After 2 weeks, again, I met him. He said, I've sold my shares at 200. He said, I got more than a year's salary, Govind. I'm happy. But I can't discuss the company with you. You are a long-term investor. You go to Bangalore, meet my MD, TTK Prestige MD, and I'll give a note about you. He will give you some time. I was very lazy to go there. And heart of heart, I thought, okay, we also made from 15, 20 rupees to 200 rupees. So 200, 240 went on selling the stocks. Most of the stocks we exhausted. My son in US, some 20,000 shares were in his name, so I had to get this challan signed for him. By the time it came back, I got some more money, 400 rupees or something, because of the delay. A friend of mine, I told him, you buy, and he had bought 15,000 shares. And he said, I told him, "Arey, tumne abhi tak becha nahi." Price was 750. He couldn't believe it. He doesn't know stock market. I told him, sell it off. Poor fellow, he asked me, can I sell 50% and keep 50%? I said, "Arey, Baba," I started teaching him about value of, money and opportunity if you sell the other, this thing. So he sold off all the 15,000 shares. So this was one of the mistakes. There are lots of mistakes actually, even over years, it's very difficult to one by one tell them. Lots of them are there.
Okay, so many mistakes, but you learn from these mistakes, right? Ramesh, how do you decide when to exit? Because that's the biggest question we get from a lot of retail investors. You guys tell us to buy, but nobody ever tells us when to sell, and then we're sitting with big losses. So how do you decide?
Sonia, the greatest mistake in the stock market is to sell something that is doubled. Oh, I made double my money, I should sell it. And there's a lot of amateur investors say, okay, 50% बढ़ गया तो आधा बेच देता हूँ तो मेरा free हो गया, But you have to understand the principle is that you should water the roses and cut the weeds out. So a stock that has doubled can double some more and double some more, as all our lives have proved. I bought Infosys, someone bought MRF, someone bought Bajaj Finance. All these stocks doubled and then doubled and then doubled some more. So you want to keep nurturing the garden with the roses. To come to a question, how do you sell? I use two simple tests when you want to sell. If I think the bull market is topping out, I'm going to sell, because you go back and study any bull market top. On average, the good stocks will fall 50%, the bad stocks will fall 80%. So I might as well go and raise cash at that point in the market. Or if I think something just doesn't make any sense to me, the valuation is so extreme compared to the size of the opportunity, you would sell. But mostly when the bull market is topping out, you feel it's topping out, sell in a graduated way. Sell 10% every Wednesday at 1 o'clock. So you'll get an average good price and you'll still be okay with it.
Shyam, what about you?
See, one thing is that in your first or second cycle, you have a lot of paucity of profit. You want to show that you're doing well. So there is a tendency to not hold stocks long enough and only show that your returns are higher. So even where you back the truck and load it up, you still tend to unload like a tipper, right? So that you should not do, basically. And it takes at least one cycle to do it. And the second thing is, you tend to back the truck very early. Many stocks, like he mentioned TTK Prestige, there are at least 5-6 stocks where we have bought large positions related to our portfolio early, with the expectation that it will come good within a reasonable time frame. Generally, to make higher returns, I think that what you buy in one cycle, you will only make returns in the next cycle if it is a solid compounder. Otherwise, you can have swing trades where, for some short-term reason, a company can go up very fast, like maybe an Avanti or a Heg. But generally, where you are looking at a company doing well for 10 years, you will see, you would have bought it in the previous cycle. And even if you have backed the truck early, you should be able to stick to it for a very long period of time. But paucity of profits and the lack of maturity in the earlier cycles generally makes you sell these ones. Even if they are your winning stocks, and even in your portfolio, if it is a stock giving you the highest return, you tend to sell the winning stocks first. Whereas you have to invert it and sell your worst stocks. So even to learn this simple thing of selling your worst stocks, it takes more than one cycle. And I find many friends of mine not learn it even after many cycles, because you don't want to accept a mistake. So I think that is something that it takes a lot of time, though it's a very simple thing. I believe that it's a very difficult thing to practice, because you always tend to sell a winner.
A winner, yeah, and take that profits home.
Have evolved continuously. So how do you, if you can just elaborate a bit more on that?
So basically, my style of investing is not screener based like modern people do. So basically, I try to write a theme that this is how this industry will change in the next few years or next 5 years. This is what the government policy will be. This is what will be the global impact. Whether there will be protection, stuff like that. And you can also write from consumer behavior also, you can say many things. So he mentioned TTK Prestige. I think that TTK Prestige is not really a story of urbanization or stuff like that. It's basically a concept where a woman's time is equal to productivity. If it's not spent in a rural kitchen, in a village, in a hut, or in a small one-room tenement, it is equal to half a day's wage, right? Nobody saw this. Actually, if you see why this theme played out later, we had thought about it in 98, right? It actually played out in 2006. So we had written the theme in 98. In 2006, The Chief Minister of Tamil Nadu gave gas cylinders, which is nothing but today's Ujjwala scheme all over India. This happened in Tamil Nadu in 2006, and TTK's largest market is Tamil Nadu. The moment they gave gas cylinders into each household, the ladies started going out to work, they started getting more money, and then they started buying small things. So while they struggled to sell many things earlier, all the products they struggled to sell started selling, right? So if you write a theme, then you are able to clearly visualize what will happen. So I think the theme which I wrote subsequently, my learning that this, I was early and I didn't hold on long enough in TTK. That learning, we took it into the next cycle and wrote the building material theme and the toilets. So, I mean, long before Swachh Bharat, we wrote this toilet theme. And we bought all of them, HSIL, Sera, all these companies. And luckily, Vijay Sahab was also there in this theme. We backed the truck and we were able to make a lot of returns because we had thought about it early and we stayed long. And the seed of this came from the previous cycle. So themes you write in one cycle, you ideate clearly what will happen, and then you wait.
But on a related note, there's so much information overload right now. How do you ensure that such diversity of information that we're getting right now from various channels doesn't impact your thought process in terms of ideation and theme building?
See, ideation should be very simplistic. You take sugar. In sugar, the simple ideation is too many rural voters' interests is involved in sugar. Okay. And you cannot let the sugar mills die either. So you need to strike a stakeholder balance. Okay. Government failed to do it repeatedly because I don't think there is sincerity of intent. Right? All you needed to do in this cycle was believe that this government will be sincere to the cause of the farmers in the largest state, which is so important to them politically. But in two states, you take UP and Maharashtra, it's 130 seats. If you mess up there politically, it could be a time bomb much worse than these three states. So it was a simple thing. And it was something which we consistently held even during this volatility, right? And it's proved again and again that governments actually come to the rescue of this. Markets, unfortunately, don't understand politics. So when we are clear in writing that government will protect this industry, there will be a stakeholder balance, and productivity is rising continuously in this industry. Somewhere it has to translate into earnings. So when you ideate very clearly as to what will be the chain of events and how things will pan out, the timelines may vary, but I think the trend will definitely follow. So you only need to be very clear in your ideation and stick to it and wait for events to happen. Basically, your milestoning will not be like a consumer durable company or a consumer product company where you just make and dump and sell and you move on. It doesn't happen then.
Okay, so you need to ideate well and you need to not watch TV channels because they cloud your mind, right?
I don't have a TV in my office, so I'm in my office from 8:45 to 7.
Okay, so now we know how he stays away from all the overloading of information. But just before I get to another topic, an interesting one which you pointed out, I want to end this how to exit or when to exit discussion with you, Vijay, because I was going through a note where you said that you invested in Shree tea for a long period of time, but the minute you heard that the company bought a sugar company, you exited the stock. So is it very important to track these corporate decisions? And if a corporate decision goes against your own ethics, would you sell a company?
Yeah, of course. I think there are two places where you can sell your stock. One is when the focus of the management changes. As you said that Shree and they wanted to buy sugar companies, and both are cyclical, right? So I thought this is not the reason that I bought Shree. Then later on, they thought of buying some milk company. So I thought now they are going to make some tea stall kind of things, from tea to sugar, sugar to milk. So
Starbucks India.
And then biscuit factory.
So I sold my stocks because the perception of the management has changed.
Yeah.
And second, when you can sell your stocks, when the valuation of your stock becomes so high that it is irresistible. For example, Atul Auto, when I bought that time, maybe the P was 5 or 6 or something or whatever it is. At one point of time, P ratio of Atul Auto was 45, whereas the leaders, Bajaj Auto's P ratio was 25. So that was irresistible to me. So that is why I sold.
Unsustainable, something that you feel would be unsustainable.
Yes, Of course, 45 for a automobile company, for a three-wheeler company, for a smaller size company is, of course, irresistible. It never happened so far, I think, in my history. So that was irresistible, illogical. Yeah.
Okay.
So I heard that quote, which you should sell when either the markets go mad or the promoters go mad. So that is.
Okay, that's interesting. So that's about exiting, right? The other thing I want to ask about is buying good companies in tough sectors. And sugar is one sector that confuses everybody. You know, you lose a lot of money in sugar. The cycles, some people can time it, some people can't time it. Govinji, I want you to come in on that because you've bought good companies in tough sectors, sugar, fertilizers, you bought EID Parry, you bought Coromandel. How do you wade through some of these tough sectors?
Actually, Coromandel is not in sugar.
Fertilizers and sugar, both, yeah.
No, they don't have sugar, but we bought EID Parry. We've been holding for a long time. It's got very deep value in the company. Each EID Parry share holds a Coromandel share. So if you see the discounting is so big, question number one. Issue number one. The second thing is, you see the management in sugar, I was told that a lot of or most of the mill owners are little cheats. When the farmer comes with a lorry, they say 10-ton lorry, they say it's about 9.6, 9.5 like that. They make money on that first. And then they keep making money. They don't pay the farmers. Whereas EID Parry has got a system where a lorry comes in, immediately a SMS will go to the owner that in the next 1.5 hours, your lorry is going to be weighed. So you please send somebody. So the farmer is assured that he is going to get 10 tons for his 10 tons. Money he'll get for his 10 tons. Second thing is they have a policy of crediting the farmer on the 14th day. They have 0 arrears. In fact, some of the executives I met, they said, we are fools actually. All over India, everybody has got cane arrears. We have 0 arrears. But these things help in bad times when there is less rainfall. Tamil Nadu, there has not been rainfall at all last 2-3 years. So in these times, when others are having 80%, say 60-70% shortage of cane, these people will have 30-40% shortage of cane. Plus, the comfort level is so much in the company that, and Coromandel is growing very well. The fertilizer industry, I think the problem in fertilizer, I can talk at length on that. It may be boring for everybody, but fertilizer, basically the policies have to change. The phosphatic fertilizers and urea is subsidized and phosphatic is not subsidized. So government can do that in the first year. It's very difficult to raise the urea prices, So once that happens, this Coromandel will become a huge story. It may happen, in the next government comes to power, because continuous usage of urea, it spoils the soil. Where you have to use DAP, you have to use DAP only. But because urea is subsidized and it's very cheap, farmers tend to do that. And Modi knows that very well. And I think in the next government, hopefully when he comes or any other government comes, I think they will have to do that. Ultimately, we have to look at progressive things. We can't go back.
Okay,
so that's it.
Ramesh, you want to comment on that? What is your investment style? Good companies in tough sectors, do you touch them? Or do you think because there are a lot of regulatory issues with some of these spaces, it's better to just stay away?
I tend to avoid them because I'm not an expert in, say, fertilizer. Buffett talks about a circle of competence, and there are some businesses you understand, so consumption businesses, I understand. So I tend to buy, more of those kind of stocks. Technology businesses I understand, so I tend to buy more of those kind of stocks. It's very tough to buy these cyclical regulatory businesses. I bought some, like, for example, OMCs, and now we're struggling with them because, today IOC declared 6.75 rupees dividend, and stocks at 6% yield, and it's huge volumes of stocks not budging. So these are tough businesses to understand. So I prefer the so-called sexier businesses of, consumption technology.
You burnt your fingers in some of these businesses that were even supposedly riding the boom, right? You bought MTNL when the telecom industry. I think that's your story to tell for a very long time.
Yeah, it's called Mera Telephone Nahi Lagta, So you bummed out in MTNL. It's hard to believe. In a sector, as Ramdev knew, he made so much money in Bharti, I kind of lost money in MTNL. So that was a very costly mistake to learn. But Sony, what I really regret more is actually the sins of omission, not commission. I understand it was a bad stock, it got out of the way. But I think Hiren was telling me earlier that he had the gall to tell me to buy, say, Ramco Systems. But I had the gall not to buy Bajaj Finance, and Hiren was the guy telling me about it. It's such a great company. I mean, you know, it's in my backyard, it's in my circle of competence, and I just plain missed it. I mean, how do you excuse yourself for that? There's no excuse for it.
So why did you not buy it?
Just didn't focus on it. I was doing some other companies, buying some other, you know, poor quality companies. There is no excuse. It's a huge price to pay because, see, I run my own money, so I'm not answerable to anybody. So I think I do a great job, and my wife says great job. But I know what I've missed. I mean, how could I miss a company like Bajaj Finance in my backyard, in Pune, you know, run by such able people? And yet, you know, and Hiren, God bless him, was telling me about it. So how do you deal with that?
Your wife will always tell you do a great job. She's biased, right? I mean, she's your wife.
She's just interested in spending it, not how I earn it.
Aren't we all? But Shyam, what about you? What has your biggest regret been, and how do you really wade through? If you think that a sector is doing well, how do you look at stocks? I mean, do you still stick to the market leaders, or do you take some risky bets just because the sector is sort of riding a boom?
No, I'm not averse to taking risks. I believe that as an investor, I should try to be more an all-rounder than a specialist like he likes to be. I think because the conditions keep changing, if you have multiple skills and multiple approaches, you can adapt your investing to the situation. So if you are only going to do one style of investing, I feel that it can become very monotonous and boring. And also that it's also opportunities also are much wider if you are able to try different styles. Mistakes, there will be multiple mistakes in that we make. Selling early is a very common thing. And being early, I think that's the most common mistake from my perspective. Like many other companies which we felt will do well in the early 90s itself, like he mentioned alcohol companies in these books. There are several themes which we had thought about early, which we could not hold on for 10, 15 years because it all got backloaded, right? So I think that's one thing that has been a consistent mistake in at least the first 15 years of my investment career. I would say even 20 years. I think the last 8, 9 years has been much better because I was clearly able to figure out that I had to overcome this weakness and try to be clearer in my thinking and hold on longer and not change my investments as long as the hypothesis is constant.
Okay.
There's no change in the hypothesis.
One more theme I wanted to discuss, and we get asked this a lot, especially by retail investors. If I'm convinced about a stock, how long before I should put more money to work? And I did read in the book, Shyam, you mentioned that you tracked Amara Raja batteries for many years. You watched it struggle. You waited for a turning point, and then you put more money into it. Similar with the case of La Opala glass. You tracked it for very long, but only after anti-dumping was announced, then you sort of put money into it. Tell us, how do you decide? How do you get convinced? How long before you put big money to work in one stock?
So I think you must be conscious of that moment. You mentioned Amar Raja. See, in the case of Amar Raja, 10 rupees per share was being amortized every year. In simple terms, what should have been EPS was being written down because of the initial brand development costs of Amaron, right? So once that ended, it translated to 10 rupees of PBT straight in the subsequent year. So we were watching this company go through a lot of difficulties, and the analyst community was mostly associating the fortunes of Amar Raja with lead prices. Whereas these guys were transforming it into a consumer product company. It was very evident. My driver was not willing to buy Excite, which was shocking because somebody who was used to Excite as a brand suddenly says, I don't want this, buy that brand. So the brand acceptance had gone, it was soaring on the one side. But as analysts, people were seeing PE ratio. When you are amortizing 10 rupees of earnings every year, it will not, your PE ratio will appear high. So when we were going through the annual report repeatedly, we found that there's only 10 more crores of rupees to be amortized, which is 1 year, right? That year we backed the truck. The price also fell and everyone bought heavily. And subsequently that stock never looked back. So there's a bit of accounting, there's a bit of observation, you have to know where the brand is going, you should have your eyes open to what's happening around you, but you need to connect it to accounting. And many companies, if you see, which went abroad and acquired businesses, many of them have done very badly in the last 10 years. But I would think that in the next few years, many of these are amortizing their goodwill, and you will see that those entries will go away, then there'll be a sudden bump up in earnings. So at that inflection point, you need to back the truck. So you need to be conscious of which company, which industry, and where you want to be, and where you are finding such opportunities.
So
There
how
is
do you
a-
find that inflection point, right, is the question. Govinji,
you,
come in
you
on
read
this.
the annual reports. You have to read the annual
Of
reports.
course, of course.
Yeah, absolutely.
Yeah. Do you, if you discover a stock, do you immediately put big money to work there, or do you wait for a few quarters, before you see a big? It's okay to miss out on some good years.
No, no, I don't have any regrets missing out anything. I don't mind paying little more and buying it. Initially, what we do, again, Kishan Bhai has taught us, buy a platform ticket. So buy some shares and keep watching it all the time. And then at the right time, opportunity, you keep increasing more, do more research on those companies as time passes. And before that, coming to the previous question about exiting, exiting actually it's very difficult, but we have invested in the cyclical companies. But my theory is that they are so very deeply undervalued. I don't intend keeping these cyclical companies for 10 years or 15 years. I'll keep a Sundaram Fasteners or a 3M or HDFC Bank for 10 years. But I may not keep any of the cyclicals for 10 years. So generally you buy them very cheap. Maybe it'll take some time for market to, realize the actual potential. And when people start realizing that, we'll get out early also, before the, real value reaches. So buy them when they're very cheap and sell them when they're a little less cheap. But they're not going to keep holding the cyclicals. Ramesh Bhai's attitude is very good actually, not to go into cyclicals, because these are all government controlled companies. Second thing is exiting, some of the companies where the valuations have reached absolutely ridiculous levels, So even the bluest of the blue chips, most of the shares we exited actually,
Like which ones make you uncomfortable?
We sold Bosch. We had bought Bosch right from 300-400 rupees on Kishan Bhai's advice. And we were also going and visiting the company in Bangalore. It is today also a world-class company. Even electrical vehicle come also, they will take care of that. Because as much as we are worried, they must have been worried 5 years back on that. But at 28,000, we started selling from 21,000 4-5 years back. The price went up to 28,500. So we sold maximum around at average of 25,000. Because at 28,000, the market cap was 85,000 crores. And my son said that, among all the 6, there are 6 factories of Bosch and this company has got 85,000 market cap. It's very absurd valuation. So last 4 years, it has not come that valuation till now. Till now, it is only 19 or 20,000. So this is about the exiting. What was your next question? Sorry.
No, so you told us about buying the platform ticket. When
Yeah.
you put small amounts to work in a stock, but when do you put that big chunk of money to work? When do you get convinced?
When I start getting, initially, on hearing from friends or reading some magazines or listening to your channel, some idea comes that, okay, we should look at this company or this industry. So
Okay,
we
at least
start,
one of you listens to our channel, so that's good.
We all
That's good
do,
to
we all
hear.
do.
see, honestly, I'm a jobless person, so I always keep doing that. Anyways.
That's not a great statement.
So coming to, we keep watching, initially we invest in a small way, but try to do more and more research on the companies, try to meet the competitors, try to, find out from the management, try to see and meet the management, because I never listen to a management on stock price, but I like to listen to the management on the future prospects, and the body language tells you a lot of things, A lot of companies we visit, the dynamism, and sometimes you visit the factories and the people working there, the enthusiasm there, you can really judge where the company is going to grow.
Any recent visits that you've made where you've, sort of...
My son he's made me very lazy. So he's now been meeting people. I have not done too many visits nowadays.
Yeah, related to that, is the question of management quality. Like you also put a lot of emphasis on management quality. But if you see historically over the last 20, 30 years, very few managements have been able to make the transition keep on growing. So what is the distinctive feature that you saw in those managements who were able to continuously evolve and grow?
See, one thing is most of the good managements, they are future thinking, and they predict a lot of bad things to come. For example, when automobile industry was doing very badly, there was a conference of TVS Motor and Sundaram Clayton. Everybody was interested in TVS Motors. Nobody was looking at Sundaram Clayton because they supplied to HCV. And HCV market was so bad. And during the bad time, a good management cleans up the whole thing, reduces the debt, and they are geared up for the next boom. So these are all the things that you see, and the people actually, how people respect the management and how they do the thing. This is what helps in building more and more confidence and investing in the companies. And then we visit them in the AGM and try to meet them and all that to understand more about these companies.
Actually, it's interesting you pointed that out, and this was a discussion in the previous panel as well, right? Where do you source your information from? Of course, reading annual reports, meeting the managements. But Vijay, in the book I read that, you bought Punjab Tractors, I think, just by reading an article in the paper that the tractor industry is doing well. If only it was that simple in today's day and age, right? How do you source your information when there's an information overload? What do you believe? What do you not believe? Do you believe research reports, or do you do your own, research?
I tell you, like smartphone, some smartphone has 512 GB memory, some has 256, some has 28, mine is only 1 GB. Okay. So I keep myself away from all these clutters, all those too much of information. As they say, too much analysis leads to paralysis. Okay. So I try to keep things very simple. And earlier when I started my career, what we were talking about, that was way back in 1990. That was, at that point of time, there was no source of information. There was no TV, there was no internet, and there was no broker's report, and there were no even books available in the country, right? So that time, we used to get information from the newspaper cuttings only. Or like suppose if they've applied, their HR department used to give some ad in the magazines that हमको एक CEO चाहिए, कंपनी का 50 करोड़ का टर्नओवर है, अगले साल 60 हो जाएगा, 70 हो जाएगा, something like this. So we used to gather information from that. So that was a piece, that article which you're talking about. But nowadays things are available free of cost, everything available on your fingertips. On a smartphone you get all kinds of information, right? So whatever actually, the thing is this, what say I learned in 30 years, in today's era, you can learn that in 3 years, in 4 years. Yeah. Okay, so that is another part. Now, since it is so many informations are concerned, are available, actually I keep myself away from all those informations. I am just sticking to my core portfolio. I keep on watching them. I keep on gathering information about all those stocks only. Rest of the news, rest of the information, rest of the things are just, I just listen from this.
Okay, so do you react or do you not react to sudden information, say an auditor resigning, management resigning? Do you, Ramesh, how do you deal with it? I mean, if the company is good and there's still some immediate short-term negative news flow, what do you do?
We should basically avoid companies in which the auditor would resign. But so I want to share an interesting story. In 1989 when I started, I was addicted to reading the Wall Street Journal. And at that time, India sold 3 copies of the Wall Street Journal. The SBI chairman, Ratan Tata, and myself. We were the only 3 guys getting the Wall Street Journal. In 1990, I remember reading a small snippet. No Indian company was ever covered by the Wall Street Journal, about Infosys. And they were developing a chip called Gamana chip, which would regulate ACs or something. And I was stunned to see an Indian company covered by the Wall Street Journal. And I bought Infosys. So sometimes reading really helps, because I read that the Gamana chip, by the way, fell off the wayside. It didn't go anything. But the stock, as you know, it created history out life. So, reading helps, as, Vijay says. You read a paper, you read a magazine, some thought process, generated idea. You'll get more ideas by just ideating and reading and free thinking than by actually reading a research report, probably.
And what about meeting managements? I read in the book that after you met managements 100 times, then you started sending your son to meet managements like NBCC, etc. And he said that I meet managements more than I meet my fiancé as well.
Yeah, I kind of pushed him to go a bit more on that companies. Clearly it's a family business, so the son is now taking over more of the responsibilities from me. I can sit back and enjoy it, like Govind Bhai says.
But do you guys still meet as many managements as you did earlier, or now do you, resort to sort of second-hand information research?
We tend to invest in the small and mid-cap universe, so it helps. It's actually productive to go meet management to see if our visions are aligned, if they are thinking the same way. And I don't think I can add anything to a Lever or Reliance or an SBI, but I can add some understanding in a 1,000 crore company. So yes, we do tend to visit them.
Okay, well, since we are running out of time, what we're going to do now is talk about some big themes. Shyam, you started off by talking about the capital goods space, right? So I'm going to just take that forward. You spoke about that being the next big theme. Are you looking at that as a theme over, 2 years, 3 years, or the shorter term, perhaps?
I think over a 2 to 3 year period, you're going to see a lot of action in light engineering. You're going to see it in capital goods. I would play it through the industrial consumables. And I think even metals may be a way of playing capital goods, because I see a paradigm shift in construction itself. See, India, until now, the primary materials of construction have been, of houses and other things, has been cement and sand. I think going forward, steel is going to become a very, very big part in construction. And you're going to have newer building materials. I would think that over 10 years, you will not have walls built the way they're built today. So you're going to have a different type of walls coming up. So I think there's a huge number of themes that you can write out, which would come back to basic industries. Okay. So, and capital goods, which I think you can play through engineering products and consumables and various other things. When I say capital goods, I'm not saying that we should go and buy a Thematic or a Bell. I think there are a lot of small companies which have very strong competence in that area, and which will grow so fast that all their problems of today will just vanish.
Like?
There are many companies. I would not like, because I may be in the middle of investment actions, it's not fair to name a company. But there are many companies in industrial goods, in consumables.
Okay, got it.
There are many.
So
they're
that's
all
one
well-known
theme.
names.
Yeah, that's one theme you're looking at. Govindji, what about you? What would be over the next, say, 2 to 3 years, what do you think the big story would be from an investor standpoint?
I think mostly there's going to be a lot of things are going to depend on the international scenario. My opinion is that there will be a lot of volatility in the market. So themes as such, capital goods, of course, they have to do well if India has to grow at 7-8%. And I think even entertainment sector, casinos and hotels and properties in hill stations and all that will do very well, because the number of working hours is going to reduce substantially over a period of time. Most of the people, then what do they do? So, and today with communications, I can sit in Kunur or Kodaikanal and do the business. I don't have to buy a property in, proper Chennai. So, and a lot of people will go on holidays. I think that sector, airlines, all these things are going to do extremely well in times to come, because slowly is catching up. Now, I traveled a lot the last couple of, last 2-3 months, not for stock market work, just playing golf and meeting friends. And I found every flight is full. Every flight is going full. So I think this theme will do very well, Casinos and hotels and all these things will do extremely well, in my opinion.
Okay, similar to what you spoke about as well, right? This whole entertainment, consumption theme. What about you?
Actually, I'm fully invested. And secondly, mine is bottoms up approach. I'm not looking for any theme. So
what's the next Atul Auto in your mind?
I don't know, maybe whatever stocks I am holding, some of them will certainly become Atul Auto. So that's a wishful thinking. Yeah.
Okay, well, we hope you find that very soon. Ramesh, any final thoughts? I mean, you spoke about, initially we started the conversation and you said that, the next big theme is going to be this whole consumption, entertainment, and casinos and alcohol and all of that. But that's a theme that you've been speaking about for a while. In the slightly more near term, what's on your mind?
My investment thesis follows those. So gaming stocks, QSR restaurants, cybersecurity, exposure to retail. I think those are the themes that I'm fairly optimistic over the next 10 years or so. And these are long-term calls. So I remain invested there.
Okay.
10%. Generally, market on the whole, index is a misnomer.
Yeah.
It's very difficult to.
So 2019 will be a better year to invest than 2018 for sure.
Better year. That's what I hope for, and I wish.
Okay, and Vijay, last word from your end.
Yeah, although I don't invest in index stocks, but looking at the under ownership in the market, I feel that maybe Sensex is going to hit a new high before the election is announced. Before the election, before May 19.
Okay, all right. That's the sticking out of the neck.
Yes.
He's sticking his neck out and saying the Sensex will hit a new high. You were saying something?
Yeah, may I just say something? I said, there's a couplet, the pen is greater than the sword and the brain is wider than the sky. I'd like to thank Vishal and Saurabh for doing an absolutely outstanding job on the book.
Oh, absolutely. These guys have written a fabulous book, and if you haven't read it already, Please go out there, buy it, read it. It has some amazing insights into how you can not just, learn about stock market investing, but grow in turbulent times. Right?
Temperament, yes.
Okay. Temperament
One
and...
thing I would like to say. हेलो या सबसे बड़ा तरीका शेयर बाज़ार में कमाने का सीधा सीधा शुद्ध आपको बताता हूँ कि इतना ज़्यादा एनालिसिस करने का ज़रूरत नहीं है. अपना नाम बदल के आर पे रख लो, ठीक है. जितने भी आर वाले हैं उनका सक्सेस देख लो, चाहे वो राजशेखर जी हों, चाहे वो रामदेव जी हों, चाहे रमेश जी हों, राधा किशन जी हो, राकेश हो, कितना नाम बताऊं. मेरा इच्छा होता कभी कोई मेरा नाम वी को रख के रवि कर लूं कि आर लग जाए और रवि लग जाए.
Okay, the R factor, right? On that note, thank you guys for joining us. It was a great evening, and I hope you do extremely well with your book.